Hey guys, my name is George Morelos. I'm a local lender in Southern California and have been for the last 20 years. As a certified mortgage advisor, my goal here today is to provide you with information once your contract is accepted. It's definitely exciting, but we want to make sure that we meet the deadlines established in your contract. Your contract will dictate a lot of things. It's going to dictate your purchase price, your earnest money deposit, how long your escrow is going to be, whether or not you have a home warranty, whether you're paying for it, the seller's paying for it, whether there's a termite inspection or not. And so any of those questions should always be directed to your agent. Your agent has a fiduciary responsibility to protect you. And as your lender, we need to make sure that we meet the deadlines that are established. Most contracts state 17 days for appraisal contingency and 21 days for loan approval. Now, under current market circumstances, this video is being recorded as of April 2021, those deadlines are too long. It's very likely that when you wrote up your contract and did your offer, you actually lowered those timeframes. Those timeframes protect you and protect your deposit. So now that you're under contract, it is extremely important that we make sure that we actually meet those deadlines or exceed those deadlines to protect your deposit and your ability to purchase the home. Within the first 72 hours, the first thing that you're going to do is you're going to send your earnest money deposit to escrow. Your earnest money deposit basically tells the seller, I'm willing to give you a deposit while I secure my financing. I need 30 or 45 days to go get a loan, so here's some money in the meantime. Now that money is part of your total cash to close. So if your lender has quoted you $30,000 to close and you get $5,000 as a deposit, at closing, you should be giving about $25,000. So within 72 hours, you wire that money to escrow. Make sure that you're also prepared with updated financials, updated pay stubs, updated bank statements to provide to your lender as soon as you go under contract. Once you provide the earnest money deposit to escrow, escrow will provide your lender with the actual fees that all third parties are charging in the transaction. Up to this point, your lender should have given you estimates. These estimates are in good faith, but they're not accurate. Your estimate will change throughout your transaction, but once you enter contract, your lender can request those fees from escrow. They put them on your loan application, and within 3 days, they're going to send you loan disclosures. Your loan disclosures are going to show your interest rate, your purchase price amount, your cash to close, your taxes, your insurance, everything stipulated as far as your loan is concerned. Now again, understand that this is a moving target. The goal is that once you close escrow, these numbers go down. The second thing that you're going to pay for is your appraisal. Your lender is going to order an appraisal where they send an independent third party out there to figure out what the value of the home is. There's two reports that the appraiser does. They do a cost report, how much does it cost to rebuild the home, and they do a market analysis. They combine those reports and they make sure that the home is safe for you and your family to move into. The third thing that you're going to pay for is a home inspection. It is not required, but it is highly recommended. It's basically buyer beware. Within 72 hours, you send your deposit, you pay for your appraisal, which is about $550 for most lenders, and you pay for a home inspection, which is not required, highly recommended. It's about $200 to $500. They usually charge per square footage. You're doing that within the first 3 days and also signing your loan disclosures. The second week, all of those reports come back in, including the appraisal, the home inspection, your verifications of employment with your employer, with the IRS, verifications of social, and all of the contracts that are going to be needed to submit your file to underwriting. Your file is submitted to underwriting once a full package is received. Sometimes you're able to go into underwriting with certain items missing. So keep in mind that these timelines can change from lender to lender, but this is normally how it goes. Once you go into underwriting, underwriting can take anywhere from 24 to 72 hours. Some lenders require a longer time frame. So the goal is that by the end of the second week, you have a full loan approval with conditions. Those conditions could either be buyer conditions specific to you, to the seller, to the escrow, to the appraiser. Once those conditions are satisfied and submitted, which should be at the beginning of the third week, those conditions need to be reviewed and cleared. It takes a couple of days. So by the end of the third week, you should have a full loan approval, conditions signed off, your interest rate locked, and by the beginning of the fourth week, your loan docs should be ordered. Once your loan docs are ordered, you're going to be signing with a notary. The notary is going to be signing all of your loan documents. After you sign, the notary will give you instructions to send your wire to escrow, the remaining balance. What comes off of that balance, again, is your deposit and normally your appraisal. So if you send a $5,000 deposit, you paid $550 towards your appraisal, you have a credit of $5,550. That is taken off of your final cash to close. You send your final wire to escrow, and normally what lenders are doing in California are working on funding conditions. Those funding conditions could be specific to you, the seller, or the agents. Normally, within 2 to 3 days after signing and sending your deposit, the lender funds your transaction. Now, depending on your contract, you can get keys the same day after recording, meaning it records in the county as your home. Some contracts do stipulate that the seller needs 3 days to move out, sometimes a little bit longer. So your escrow should normally take about 30 to 45 days. The majority of escrows right now are requiring 30 days or less. The reason is you need to stay competitive in this market. It's definitely a seller's market. Before you get out there and look at homes, you want to make sure that you're fully pre-approved. If you spoke with the lender on the phone and all it was a simple phone call, you are not pre-approved. If you submitted an online application without submitting paperwork, you are not pre-approved. You need to make sure that you're working with the lender that fully pre-approves you. That means you did a loan application, you provided financials, pay stubs, taxes, bank statements, and the lender verified your employment with your employer, with the IRS, verified your social. It is key to make sure that you get your offer accepted and key to make sure that those deadlines are met. If you have any questions, feel free to leave me a comment. Subscribe for future videos. I certainly hope that you found this useful and helpful. Thank you again. My name is George Marilos, and I'll talk to you soon.